Hey everyone, welcome to the Investing in Real Estate podcast with Clayton Morris. You are listening to Natalie Morris, and we're glad you're here today because we're going to tell you 5 reasons why your real estate investment is safe.
Yeah, that's right.
So we're going to help you hire some black ops and, carry a gun and put, stuff in your basement that makes sure that I thought we were doing the zombie apocalypse.
No, we're doing real estate investing. What's the matter with you?
You said safe.
Safe.
From zombies.
Well, I didn't talk... No, we're not talking Walking Dead. We're talking real estate investing.
I thought we were talking in case of life apocalypse. Which also, I guess...
Look, if the apocalypse happens, if Walking Dead actually happens, right? And Rick and Carl are out there, he's got a patch over an eye, right? We don't know where Glenn is.
Well, thanks for giving that away.
Oh, if you've seen Walking Dead, you know he's got a patch over his eye. He's missing an eye.
I didn't know that Glenn was missing, but okay.
That was like season 1. Season 2. Listen.
What we're actually going to talk about is a different kind of safety, though. We're going to talk about financial safety under the assumption that our financial system is still up and running, which is not a safe assumption these days. I just want to say every time I go to the market, I'm like, I need extra dry beans.
That's how you measure safety, is how many dry beans you
Well,
have.
yes, but okay. But what we wanted to talk about was why your real estate investment is safe in terms of your larger financial plan in this ruse we call capitalism, right?
Well, I mean, a lot of people...
I'm cracking myself up.
I don't know what you've had tonight. FYI, actually... For your information, she was in a real cranky mood before we did this podcast.
I had a roast chicken,
and I said,
and no alcohol.
Yeah, we had a roast chicken for dinner, no alcohol. That's the problem. We're sitting down here at the bar. Should I pour you a drink right now so we can kick off this episode? I'm going to pour you a scotch.
I'm kind of looking over there
I'm going to pour you a scotch right now.
Might be easier with something from over there.
No, so she was a little cranky earlier because our little girl, our 15-month-old little girl, did not eat any of the dinner, and she was just whiny the whole time and crying.
That's not why. But okay, all right.
So you were cranky for some other reason?
The holidays make me super cranky. But let's not talk about that.
Okay, so let's talk about real estate investing, and let's talk about the 5 ways in which it is an incredibly safe investment. Now, the impetus for this podcast, if you will, is because very often, my team talks to hundreds of investors a week, and usually there's one spouse, one partner in the relationship that is nervous or worried that real estate is a really risky investment, right? We've been so trained to think of the stock market, your 401k, that's safety, right? So what this episode I hope will do is help unwind some of that conditioning to actually show you that real estate is a far safer investment than the load of crap that you've been shoveled for a number of years.
I don't think you should... you don't want to crap all over the stock market, right? Because there are plenty of people...
I'm not crapping all over the stock market.
I just don't want to turn people off by...
No, but we've been ingrained,
yes.
We've been conditioned to believe that there are certain things that are safe, right? I was trained that way to think that put money into into my 401k at my employer, get some treasury bonds with an incredibly low return. Those are safe, right?
Yes.
Yeah. But with no return at all.
Okay.
Right?
So what we're going to do is sort of help you figure out how we weigh the safety of our investments so that maybe you start to change the paradigm of your thinking, because you probably think, like I did when we first started managing our money, that the 401k was like the holy grail of investment, that you must never touch the 401k come hell or high water, right? Mm-hmm. And you have to start to really see the 401k for what it is. The 401k makes Wall Street very, very rich. The 401k does not make you very, very rich. The average withdrawal of a 401k at full retirement age is $90,000. So I don't know about you, but I can't live in my expensive New Jersey suburb for $90,000 for very long.
For like a year.
Right.
Then we're out of it.
And so, the 401k is very, very expensive, and it's based on a cyclical market that you do not affect. So there are plenty of people that think, okay, I'm just going to sit it out and time the market, right? But if you really do the math on that, you lose money for inflation. So you have to start to see your investments as something that, especially if they're in the market and you just sort of sit and leave them there, that's making a lot of other people a lot of money.
And the creator of the 401k, did you read this article last week? The founder of the 401k came out and said he thinks it's a total disaster. That his idea for it has long since been screwed up. Money that's taken out of it, it's totally changed from what his intention of this little bit of a nest egg. He thought of it as like a little bit of a nest egg,
like a little safety, like side hustle.
Right. It's now become, in his mind, the holy grail, that the only thing you're supposed to invest in. And with all of the fees and everything that are taken out of these programs, he thinks it's a disaster. That's the founder of the 401k. All right. So let's talk about 5 key areas why real estate investing is perhaps the safest investment you can make. Let's start with number 1. It can never go down to zero. What does that mean? Why can it never go down to $0 in value?
Because it's a thing, and
Right.
you can always sell a thing, right? Whereas a stock certificate is a piece of paper that's worth a share of a company that actually may go bankrupt. A piece of land can't go bankrupt, right? A company can go bankrupt and they can say, sorry, Enron shareholders, you're getting nothing. Did you know I had Enron shares?
You had Enron?
I bought them like right before that, yeah.
How much money did you make from Enron?
Like zero.
Exactly.
That was zero.
So
That
there you
was
go.
a
I mean,
negative number.
Real estate, even like a worst case scenario, real estate can never go down to $0 in value because, again,
Yeah.
you're investing in land with real estate on the land. The land can never go down to $0 in value. It's impossible. So that's number 1, that you have this asset that other people don't have when you have the stock market. You have this intangible sort of air. A lot of people say that's like investing in air. Mm-hmm. Robert Kiyosaki likes to say he does not invest in air. And that's what a lot of the stock market is. So if you think of safety, at the end of the day, do you even know what's in your 401k? When you're sitting down with your spouse having a discussion, if you're sitting there saying, I'm not going to invest in real estate because it's risky. Really?
Then what are you invested in? Because
Right.
once, when we had kids, I got really crazed about all the toxins in our food and our plastic kitchen appliances and all kinds of, I really went down a hippie rabbit hole. I live there now. Come visit me. But I decided, I called up our financial advisor and I was like, I don't want to invest any of my money in anything plastic, anything, like non-organic. I don't want any fast food. I don't want anything like that. And he was like, that's impossible.
He's like, that's the stock market. I'm sorry. So morally too, right? You're investing in crap.
Right. And he was like, no, there's no way to do that unless you just pick one stock and you only invest in
Apple.
Burt's Bees or even Apple.
Or Tom's,
their
Tom's
products
of
have
Maine.
plenty of toxins in an iPhone, right? It's not like an iPhone doesn't strip from the environment. So if you're really going to be a purist of it, there's just no way to do that. That's not to say that, there's not a lot of ungreen practices in real estate, but that's something you can affect, right? You can choose what you invest in. But when it comes to the stock market, if you really want to play the game and win, you have to invest in things that you are not ideologically aligned with.
And I'm pretty happy that we invest in properties in neighborhoods that were boarded up at one point and are now rehabbed and have a family living in that. That's a good feeling. That's a really good feeling. So those
Can
are
we make all those families compost?
Can they compost? And that's not going to happen.
You
can try. You can do what you want to try. So number 1, it can never go down to $0 in value. Number 2, because it is a tangible asset, okay? It is a tangible asset. And when you say to yourself, what is the worst case scenario for a property? What are you laughing at?
I heard your stomach
My stomach
rumbling.
was, because we just had a little bit of roast chicken. I'm hungry. I want more. I'm hungry.
People already in the comments think I'm the worst wife. And they're going to think she doesn't feed him.
Yeah, there was a comment the other day that says, man, she's a
mean.
bossy wife. You know what it is? She's not, well, she's sometimes bossy, but it's that I make these sort of demands all right, we've got to go and do the show right now. And of course, she's had a long day. I've had a long day. And so I will grant her, I will give you that.
Thank you. That's so
she's
kind.
she's bossy a lot, but She's not the worst.
What if the microphone picked up your rumbling stomach?
I don't know. So number 2, tangible assets. When you're investing in real estate, it is a real thing. It's not air. It's an actual physical structure. It's a real asset. And the question when you think about tangible assets, so ask yourself this question as you're an investor. What is the worst case scenario with owning a $50,000, $60,000, $70,000 rental property in a C or B class neighborhood? What's the worst that could happen? You're sitting there saying, well, I'm terrified that maybe I won't get a tenant in the property.
Right.
So then really, are you honestly saying that to yourself? That what if I can't possibly get a tenant in this property?
Well,
really?
Some people feel that way. Some people feel like if you don't know the neighborhood and you don't, but there's a lot of ways.
No, but I guess my question
research.
is that really going to happen?
No, it's so unlikely unless you're renting out like the Bates Motel or something.
Even the Bates Motel would rent. I'm saying maybe you'll have a vacancy for a month, maybe 2 months. Worst case scenario. But is your property going to remain vacant forever? Of course it's not. So
right.
To deal with that, right?
There's so many ways to research a rental market, and there are, this is as our economy starts to do some like the conga, basically, like who knows what our economy's doing. It's up, it's down, it's right, it's left. It's really a renter's market because there are plenty of people who they just don't want to deal with getting a mortgage, or they don't know what the economy is going to do. They don't know what their job stability is going to do. So the rental market's going to be great. And we're heading towards another market correction. That's just history telling us that. And when that happens, interest rates will, take a dive. And, now it's just, who knows? Like historically speaking, it's time for the economy to hit another speed bump. All right, number 3 on the list for the reasons real estate is an incredibly safe investment is the stability. That historically, stability, the real estate market is more stable than the volatile stock market. And you look at historical data, that's just the case. That there has been more stability in the housing market. We're not just talking about the housing market, we're talking about the rental investing market. Yeah.
Right? So if you're talking about the volatility out in San Francisco or Miami or those areas where primary homeowners are making big purchases and being over leveraged, that's different data than what we're talking about. We're talking about the rental real estate investing market. The areas that we invest in, those areas that historically, even during downturns, remain consistently rented during that time.
Yeah.
But think about the volatility in the stock market. Have we seen that?
Right. And the volatility, again, in the stock market, it's historically on an every 10-year basis. And some economists think that now we're moving into an every 5-year market correction. So that in which case it's high time, right, for that.
Right.
And so when you see the housing market sort of expand and contract, that's usually in A-class primary home markets. But rental markets remain relatively stable, especially in more working class neighborhoods. So that's something. And also you have to think about the stability of that investment. Whereas, when we first started investing in real estate, I remember you saying, okay, I bought this property, it was $36,000 and it needs $20,000 of rehab. And I was like, well, how long until we get that back if it's rents at this much? And that's just the wrong way to look at it. Because right now, I don't care about when we get that chunk of money back. I care that chunk of money performs every month for the rest of our lives. I don't want that in a bank. I want that in a stream.
And I like that, the idea that cash is really, you don't want cash. Cash sitting in your bank account is not doing anything for you. And it's a limited supply, right? But if you can take that cash and actually turn it into performing assets, that's when you create real value, which we'll get to in step number 5 here. Number 4 on the list, why it's safe, is appreciation. Mm-hmm. So you see with the stock market, it goes up and down and up and down. With real estate, you're purchasing not really on appreciation, right? That's not the goal.
You're not investing for appreciation, right? Because you're not flipping these. You don't care what the value is next year so that you can sell it. You care what the value is next year because it adds to your assets. And then you can play them like it's a new hand of cards.
One of my mentors said, I don't care what my properties are worth. I don't care at all. Do they perform for me every month? And that's a hard thing for you to swallow sometimes. Like, really? You don't care? But he, at the end of the day, really didn't. And what he was saying is that they produce for him on a regular basis. But the appreciation on some of his properties, when you look at your portfolio, let's say you have 50 properties and a few of those properties have appreciated really nicely. What can you do with those? Well, you could choose to sell those properties out from your portfolio in a 1031 exchange and trade up, maybe sell one property and buy four, right? Or leverage that property. Now that it's got more equity, maybe you could take out a home equity line of credit, or you could go to a local bank and take out some additional cash from that property.
Exactly right. Exactly right.
All right, number 5 on the list.
Number 5, passive income, like we had just talked about, is a way for you to turn a lump of cash into a stream of cash. And so clearly that's safe. You know, I remember trying to do the math on how much we would have to buy in dividend producing stocks in order to have passive income to live on. And it's so hard to do because dividend stocks are slow growth stocks and you have to buy a crap ton of them. Is that okay to say crap?
You can say crap ton.
Okay.
Yeah.
I was going to use another word for ton, but I didn't.
Clay ton.
Oh yeah.
Get it?
I do get it. That's a good one.
Mm-hmm.
That was pretty clever. What was I saying? You
That-
distracted me with your funny joke.
With my hilarity. So you were trying to do this with the stock market,
Oh
with dividend
yeah,
stocks.
I just could not figure out. Like, it was so unlikely for us to take. We had, you know, a chunk of money that we had both saved in our working for 10 years in our regular jobs, and it was almost impossible to take that and buy performing assets in the stock market that we could live off of. It would be like a couple $100 a quarter, basically. Even in the most like secure dividend producing stocks, you know, it's crazy town.
So we have, in case you're new to the show, you've never heard it before, you can download, we have a freedom cheat sheet, which lets you, it's totally free. If you go to Morris Invest, just MORRIS invest.com/freedom, you can download it. It's a 3-page PDF that will help you figure out how much passive income it will take you and your family to live financially free. So the safety of imagine having an additional $6,000 a month coming in passively, meaning that your tenants in your rental properties throughout the country are paying for you to live.
Yeah.
What could be safer than that, right? Let's say you have an injury at your job, right? You can't work. You're on workers' compensation, or you're laid up in bed for a while. Somebody gets laid off in your family and not bringing in that additional income. Well, what would that mean for you to have that additional passive income coming in every month? I mean,
Or more dried beans.
yeah, or in the zombie apocalypse, making sure you're prepared with dried beans.
Well, the dried beans would also be very useful if you lost your job as well. Then you have food.
So that's be the only thing you would eat is dried beans?
It's one way to live.
Could you imagine what
It'd
that
be
house
a painful way to live.
what that house would smell
But it's
like?
one thing you can do.
Yeah, I would. Don't you want to go over to Natalie and Clayton's house again for
No,
dinner? No,
I
all they have is
don't.
beans and water. Water and beans. So there you go. There's 5 reasons why real estate investing is this, I believe. Do you believe it's the safest investment you can make?
Well,
Can you think of anything
I
safer?
mean, you're asking me this question. Wouldn't you know if I thought something different by now? We're married.
That's true. I just like to hear it from time to time. It's like, I like to hear that you care about me.
Okay.
You know?
I'll write you a card.
Yeah. Can you send me a Hallmark card?
Christmas card that
I
says-
love you. Merry Christmas. By the way,
Real estate super safe.
real estate is super safe, honey. Love you. XOXO. There you go. Thank you so much for downloading and subscribing. I really appreciate it. And I just want to say thank you from the bottom of my heart. This year has been amazing. And the number of subscribers, I just checked our analytics for subscribers. We've more than quadrupled since September of 2017.
Despite your bossy wife.
Despite my bossy wife, or maybe that's the key to success. I don't know, and I hate to think it is, because then that means that I'm in for more bossing. But thank you so much from the bottom of my heart. Have a wonderful holiday season. And, hey, when you're around the kitchen table, when you're talking about, finances at the end of the year,
Yeah.
you can say, hey, guess what? Real estate investing is the safest investment you can make, honey.
Let's think about that for 2018,
Right.
honey.
When you have naysayers in your family. All right. We'll see you next time, everyone. Now go out there, take action, and become a real estate investor.
Bye-bye.